Welcome on board, Nilesh Ranjan, ED at Union Bank of India, joining in right now on the show. Nitesh, great to have you on the show. And before I ask you about numbers, let us know if you are launching a QIP soon and what's been the interest from investors so far.
Yeah, so first of all, I would like to say that our board has given approval for raising equity capital to the maximum amount of 3,800 crore during the current year. So obviously, we'll look at the right opportunity. Having said that, I would also like to add that today, in terms of capital, Union Bank is very strong, having total capital adequacy ratio of 14.5% and the core equity of 10.7%, and that is excluding the 9 months profitability. Therefore, to say that we do not need capital for the growth per se, the only requirement of the capital is to increase the public shareholding as per the SEBI norms. So, we will be looking at the opportunity this quarter, and at the appropriate time, we will be giving the right disclosure.
Right. Your bank had given a guidance of 10 to 12% credit growth for the current fiscal, with more than 20% credit growth for 2 consecutive quarters. Are you now looking at revising your guidance?
So as of now, we are not changing any of our guidance. In fact, we are reaching most of the guidance that we have given for the full year, quarter after quarter. So you are right that today we are growing close to 20% in the advances. Our March 22 base was also higher. So at this point, we are not revising. However, we are hopeful that we will be surpassing the credit guidance target given for FY23.
Now tell us a little bit more about the corporate book performance. Where is demand coming from, and is it just working capital demand?
Yeah, so corporate demand is there. It's coming, but gradually. And some of the sectors that we are seeing the demand are the renewables, textile, chemicals, some of the cement. There we are seeing some good demand. However, there is working capital demand also due to the inflationary factors.
And your net interest margin growth is at about 3.2%. That's pretty strong. Do you believe there will be pressure on your margins going forward, especially in light of the fact that it is a high interest rate regime, or do you think you can maintain or better your margins?
Yes, so today we are at 3.21. Our guidance has been for the current year at 3%. We also believe, and we are already seeing in the system per se, that deposit growth rate is lower than the advances growth rate, and the trend in advances is very high actually for the future growth also. So obviously, as the deposit rates are getting repriced, going forward maybe a quarter or two from now, we'll be seeing some pressure on the margin, but we'll be able to maintain around 3%.
Right. And what is the reason for your Kasa ratio being down 153 bips this quarter, despite deposits actually showing a healthy growth of over 13%?
Yeah, so as we discussed, there is competition for the deposits today because overall in the system, deposits are not growing where advances are growing at a much higher rate. And therefore, to support the demand for the advances, we are also resorting to the term deposits, particularly on the bulk deposits. Although for us, that is not too much right now. And that is the factor why the Kasa ratio per se is lower. However, we are seeing the good growth in Kasa quantum overall.
Right. Your bank is also guided keeping the GNPAs under 9%. And now that that's being achieved, what is your outlook on the asset quality going forward?
Yeah, so first of all, I would say asset quality for the banking sector is the story of the past. Right now, we are talking about only the growth. And you are right that while in the beginning of the year, we estimated that gross NPA will come down to around 9%. But during the year, both in terms of the fresh slippages, the recoveries, as well as the stress assets, I think we have been surprised very, very positively. And that's how the current level of gross NPA is lower. I'm sure that going forward, there will be further decline in the gross NPA ratio as well as the net NPA ratio of the bank.
Right. And how much of your recovery target of 15,000 crores in the current fiscal has been achieved? Do you expect more recoveries since NARCL is active now?
Yeah, so we had 15,000 crores of target for the full year. As we speak, in the 3 quarters, we have already achieved more than 13,600 crore. And our estimate is that we'll again be surpassing the recovery target that we have set for ourselves during the current year. This is contributed, I think, during the current year mostly by the granular recovery coming from the retail and MSME and agriculture sector. And obviously the NARCL has also started not taking up the accounts, and as you are aware, some of the accounts are in the advanced stage of resolution. So this quarter we can expect something coming from the NARCL also.
All right, we'll let you go on that note. Thanks so much for joining in and walking us through the latest details. That's Union Bank for you. The management saying that they will be going ahead with that QIP. As of now, there's no change in the guidance of credit growth. It's at about 10 to 12%, and asset quality will remain strong.